Well, good morning and thanks for joining the webinar. My name's Grant Mooney. I'm a non-executive director of Carnegie, and on behalf of my fellow directors, I'd first like to thank you all for taking the time to join us and hear how we believe we'll take Carnegie forward and what in our view is an exciting pathway towards the commercialisation of Carnegie's CETO wave energy technology. As you'll no doubt be aware, Carnegie entered in administration in March this year on the back of continued and unsustainable losses from our EMC solar microgrid business. Those losses, coupled with the federal government's 2018 proposed changes to the R&D tax rebates, which impacted Carnegie's ability to fund its share of the Albany Wave Energy project, saw the WA state government withdraw its $15 million funding towards the Albany Wave project, and it made it difficult for Carnegie to raise additional capital to continue its operations. Today, Carnegie's uncoupled the EMC solar business and put it into liquidation. No more losses will be incurred from that business. We've slashed costs and overheads, and we've agreed to convert much of Carnegie's overhanging debt to equity and entered into agreements for any remaining debt to continue in the form of loans convertible to shares. We retain 100% ownership of the 2 megawatts Garden Island solar microgrid, which is now online and operational, selling power to the Department of Defence. As our Chief Executive, who's going to join us shortly, Mr. Jonathan Fiave, will inform you in his presentation, we're seeking to raise a minimum of $5.5 million and a maximum of $11.5 million through this rights issue and resume trading on the ASX in the next month. At completion, and assuming we achieve the minimum raise, we'll have an undiluted market capitalisation of approximately $11.5 million. Cash of $3.8 million after meeting costs associated with the administration and the offer, 100% ownership of the revenue generating Garden Island microgrid, carried in our books at 31 December 2018 at $4.8 million, debt in the form of convertible notes of approximately $2.8 million, which matures in March 2021, and 11.5 billion shares on issue. Before handing over to Jonathan, I'd like to refer you to page 5 and 6 of the prospectus in relation to the speculative nature of an investment in Carnegie and the forward-looking statements that are within the prospectus and within this presentation. If you're planning on investing under the prospectus, I'd ask that you read the prospectus thoroughly and seek professional advice if necessary. Please feel free to contact the company if you do have any questions also. I'd now like to hand over to Jonathan, our CEO, to outline how we are going to deliver value to shareholders as a result of the recapitalisation and why we believe it is an attractive investment for shareholders to take up their rights in the offer. Jonathan.
Thanks very much, Grant. So I'd like to start with a high-level walkthrough of Carnegie 2.0. From a corporate perspective, as Grant said, the balance sheet and cash flow forecast is far simpler than ever before. We don't have the large projects with large capital expenditure, penalty clauses and other liabilities that were so hard to predict. Overheads have been minimised and we're working out of Carnegie's spiritual home in Fremantle. We've retained the vital experience built over the last 10 years through retention of key staff and data amassed on Carnegie servers. Looking to the assets of the business, the CETO IP is held in patents, trade secrets and know-how, and this has been retained and is our most valuable asset despite the write-downs that have occurred. The second most significant asset is the Garden Island microgrid, which had a valuation, as Grant mentioned, over $4 million at the last audit. It's a revenue producing asset and a key footprint on Garden Island, providing an option for us to deploy there again. Thirdly, the Fremantle site, with its test area only 300 metres offshore, remains a unique facility, one which we can use for our own testing and the testing of other relevant technologies. The Albany licence we hold allows us to confidently explore opportunities there at the right time in the future. So to our business model, we can now move away from the extremely capital-intensive approach of funding large-scale prototypes towards a lower cost, more efficient digital development approach. We plan to build partnerships where we share the cost and risk of deployment projects. Revenue will be earned through a technology licensing model whereby manufacturers will build the device under license for the project owners. So what is it that continues to drive us as an organisation? We're intent on being the world leader in wave energy by owning the best technology for deployment on a massive scale. So reflecting on the pursuit of wave energy and why it's so compelling, it's clear that there's an enormous global resource. Importantly, it's one that's highly predictable and consistent when compared to other renewables. These features of wave energy are going to become increasingly important and valuable in a grid with high renewable penetration. To illustrate, if we examine the plot on the bottom right-hand side of the slide, we can see wind and wave data from Albany with a typical solar profile overlaid. The solar is in yellow, the wind in green, and the wave in blue. What's important is that while the solar power drops to zero each night and the wind drops to near zero fairly regularly, the wave energy remains well above zero the whole time. This highlights the role wave energy has to play in the future energy mix. In June, I was in Rome for NL Green Power's Marine Energy Summit, and their CEO also raised the issue in Europe where land for wind and solar development is becoming increasingly scarce and expensive. Wave energy clearly doesn't have that issue. And finally, as I'm sure you've all noticed, there's growing concern with the state of the climate, and the people of the world are ramping up pressure on governments to act and support clean energy development. So when you put all these factors together, coupled with humanity's track record of exploiting resources, it's hard not to agree with those that say that commercial wave energy is inevitable and it's just a question of who and when. So how do we, Carnegie, make wave energy a reality? In terms of a model for developing wave energy, the best one I think we have is offshore wind. It's a marine renewable technology that was derided by many as too expensive and never going to be competitive. Now, today, it's being deployed at a rate of over 4 gigawatts per year with an annual investment of around $22 billion. This rapid growth in the industry has come largely as a result of the reduction in cost as the industry matures. For example, in the early days, they were using oil and gas vessels to install turbines, but as we see on the image on the left, purpose-built vessels are now doing this work and capable of mounting each of these enormous turbines in less than 24 hours. For wave energy, Ocean Energy Europe predicted that by 2050, 188 gigawatts of wave energy capacity would be installed. So how is Carnegie going to pursue this opportunity from where we are today, and how is it different to how we've pursued it before? While there was an enormous amount learned under the previous approach of deploying increasingly large prototypes, it's fair to say it was very capital intensive. It also meant our specialist engineers stopped innovating and became project engineers and contract managers during the construction and procurement phases. The new approach recognises these past challenges and also the capacity to do more virtually in a digital environment, do it faster and do it cheaper. Some people have expressed sentiments to me that this sounds like a more academic and less commercial approach. Quite the contrary. We need to ensure that the next time CETO is deployed at a large scale, it's done with a clear path to unlocking a commercial project. So we'll be embracing simulations to quickly test the variants and new ideas, as well as confirming the commercial prospects. The supercomputer at Pawsey we use is called Magnus and has around 8,000 times more processing cores than the average laptop. We use it to calculate the forces waves apply to the CETO buoy, and we'll now start using it to generate the training data for our machine learning work, which I'll go through in more detail in a moment. We'll be simulating the power takeoff and other mechanical and electrical elements of the system to optimise their design and performance. We use our in-house high-performance computers for this work and already have experience and established models. Of course, it's critical to validate the digital work with real-world tests. We've already completed a lot of validation work, but there will be further tank testing undertaken to anchor our simulations. We'll also complete a suite of small-scale physical tests, many of them at our Fremantle site, to validate the power takeoff design and other aspects of the system. The result of all this work delivers a virtual prototype that can simulate the whole system in any wave condition and operational scenario. You can think of it as a flight simulator for CETO. So this, together with the physical test results, will be used as the business case for a licensing arrangement. Let's talk about the innovations we're going to develop with the digital approach. We've outlined in the prospectus some key streams in the innovation program. We have machine learning to increase energy capture and avoid high motions and forces in storms. We have advanced power conversion, which is a move away from hydraulics to a purely electrical power takeoff, where we're leveraging the millions pouring into electrical vehicle development. And then there's the work we're doing on hydrodynamic optimization. Given the limited time, I'd like to briefly explain one of those streams in more depth, and I've chosen machine learning since it's probably new to most people. So our objective here is to increase the energy CETO can capture from the waves and minimise the motions and forces during storms, which add cost. We've developed controllers before based on physics that can go some of the way, but the environment is so complex that the controllers can't cope, so we don't reach the optimum. Machine learning is a technique by which an artificial brain, also known as a neural network, is able to process inputs into outputs, much like a human brain processes sight and sound into decisions. We're developing a neural network that can read the waves and decide how to control CETO to achieve the best outcome. The neural network can also learn on the job to keep improving and adapting.
So we're just going to switch now to a video to illustrate and demonstrate that this concept isn't science fiction. In this video example, a four-legged robot using a neural network for a brain learns to walk from scratch. You'll see it doesn't know how to walk in the beginning, but through a relatively short trial and error process, it learns to move away from its starting position. Over time, through more and more walking, it will become faster and more capable through a process known as reinforcement learning. So this is what we envisage with CETO, a machine learning based controller that is trained and can operate safely when it first goes in the water, but it learns over time while it's operating to become more and more efficient. It gets even more interesting as the units in the array learn from each other and accelerate the process, but that's a bit down the track. So the first part we've worked on is where we read the waves. We call this our wave predictor, and despite being in administration and all the related challenges over the last 6 months, we've been able to make good progress on it. In this video you can see two virtual oceans. The one on the left has the current surface elevation, and the one on the right is 30 seconds into the future. Pausing there, we can see in the left ocean a series of measurement points in green feeding inputs into our wave predictor neural network that is trying to predict the surface elevation at the CETO unit, indicated by the white circles. The blue line in the plot below is the actual wave elevation at the CETO unit, which is the value we're trying to predict. So now that the predictor has had some time to initialize, if I continue the video, we can see the predictor in red successfully and accurately predict the surface elevation from the measurement points hundreds of metres away. The work is not complete, but it's a good start on one of our first milestones. It's also worth pointing out that our wave predictor and machine learning based hydrodynamic solver could be attractive tools for other marine based industries, such as shipping, offshore wind and aquaculture. If we move now to the overall development plan, we'll see the wave predictor is the first milestone.
This is a high-level representation of the plan for the coming years, culminating in the virtual prototype and forming of partnerships by the end of Q3 2021. I won't go through each of the steps right now, but there's more detail in the prospectus, and of course we have a lot more granularity in the internal project planning documents and budgets. Importantly, this plan provides a means for you, the shareholders, to measure our progress as we'll be reporting against these milestones along the way. So to reiterate and demonstrate why we're confident in delivering on this plan. Firstly, the business is far more streamlined before, with lower overheads and great certainty over costs. Our heritage in the sector and recognised leadership has established strong alliances with industry and government. We'll be leveraging these relationships to support the work we're planning. We have a cost-effective development plan that rolls into a new, more efficient business model. And perhaps most importantly, we have a strong and passionate team committed to the success of the business, which we'll augment with a few key hires in the near term. You may have gathered I'm not the most flamboyant presenter, but I'm genuinely excited about what we can achieve in this new chapter with a new approach and the team, and I hope you can see the potential in this and you join us on the journey. Thank you for your attention and interest. I'll now hand back to Grant to manage the Q&A part of the session.
Thanks, Jonathan. I would now like to open up the Q&A to the audience that's with us. There is a question that's come up, which is what was CETO valued? What was the CETO value been written down to? Now, it's a good question because it has, over the last 2 to 3 years, suffered significant write-downs. Just to go back in history, in June 2017, I believe, and I'll confirm this, I think it was in the order of $80 million carried as an intangible on the company's balance sheet. Then in June 2018, it was written down to a bit under $50 million, and that was largely as a result of a change in the accounting policy or the mechanism by which the independent valuer chose to value the technology. And then in December 2018, it was written down to $15 million as a result of the change in the market capitalisation of the company. That is, the fall in the company's share price provided in what we call an impairment indicator, which requires the company to consider writing the value of any assets on its balance sheet down to not more than that market capitalisation. So as we stand today, it is at $15 million, although there will be a valuation undertaken at 30 June, which has not yet been completed. And as I mentioned earlier, the market capitalisation of the company upon completion of the recapitalisation will be in the order of $11.5 million based on a minimum subscription. So that, I hope, answers the question on where we are with our carrying value of our CETO technology. All right, let's go to questions. Okay, we have a couple more questions that we'll just respond to. The first question, which one will be one that Jonathan can respond to, is do you have any competitors, and how do you compare to them?
Do you have a unique selling point?
Yeah, do you have a unique selling point?
Yeah, it's a good question. There are competitors. There's a number, particularly in Europe. We've seen a number of other wave companies developing their technologies and deploying. I would say there's probably only about 3 or 4 that are serious contenders. And in terms of a unique selling point, I think the key thing with CETO is that it's a submerged technology. So, you don't have that aesthetic issue where when you deploy near the shore, people are concerned with the outlook, much like they are with wind farms on shore. CETO operates under the surface, and for virtually all sites, there won't be any visual amenity loss when CETO is deployed. I think it's also got a very high power to weight ratio, so that's a very good metric for, I guess, its commercial position.
Okay, just looking at the other questions.
How interested are NL Green Power? So, lots of questions coming in. I'll try and answer that one. So, NL Green Power signed a collaboration agreement with us last year. They also signed collaboration agreements with a few other companies, but Carnegie was the only one which received a payment as part of that collaboration agreement. The agreement is valued at €1 million, and we've received the first milestone payment of that. We've had NL Green Power down here in Australia earlier in the year, and we also were invited, as I mentioned in the presentation, to a summit at NL Green Power's home in Rome. So, I think they're very interested. They have a long-term view of the market and the industry, they're pursuing. They've got a dedicated team to wave energy and marine renewables, so they're very interested.
There's a question on whether we will remain as an internationally focused company with projects being looked at in international waters. Our focus is to, at this point in time, deliver a commercially ready CETO technology. Now, it will be for other third parties that wish to license that technology once we get to the point where we can deliver that commercial technology to deliver projects in international waters. Having said that, we retain the alliances and the network to engage in discussions with those parties internationally. We spent a lot of time and effort over the last close to 10 years working in Europe, looking at wave opportunities, and obviously we've got those core alliances with Enel and prior to that EDF-EN to advance our interests in those international waters. They won't go away. They are still there. So we are still very much an internationally focused company, but we will not be in the position to deploy projects given the large capital costs and the demands on funding those large capital costs. Our focus is to deliver a digital virtual technology with a lower cost and using tank testing and other smaller scale testing.
Grant, there's a question here. Will existing shareholders retain their portfolio in Carnegie, and what will the share value be at the relaunch on the ASX?
Yeah, so what we're doing is we're not reconstructing the stock. We are we're seeking to offer all of the existing shareholders their rights to go with the company and fund the company going forward. And if they do choose to do that, it minimises their dilution going forward. And that was always a focus on the recapitalisation, is to provide those shareholders of some 11,000 that we have with the opportunity to continue with the company by way of this rights issue. It will see an issue price of 0.1 of a cent. Now, I'm not in a position to make any sort of comment as to whether I believe that is cheap or expensive. I think that's up to the shareholders to make that decision. I can only refer back to the history of the company where we last traded at 0.3 of a cent, and that we will be issuing around $5.5 million worth of stock at 0.1 of a cent. So I hope that answers that question.
Perhaps another one that's worth answering from you, Grant, is who are the key stakeholders and how much skin in the game do they have?
Yeah, so the key stakeholders will still be the broader shareholder base upon completion of the capital raising, assuming that they take up their rights in the rights issue. There will be stakeholders that increase their equity position as a result of conversion of the half of the existing convertible notes, and they will include the likes of the existing note holders, being the asymmetric group, of which one of those, and the representative Anthony Shields, is coming onto the board. Another is non-executive director Michael Fitzpatrick, who will be converting part of his notes and also part of his recent 2018 loan funding that he helped fund the company to the tune of $1.15 million. And myself and Anthony Shields, who've put up a total of $500,000 to fund the administrator through this administration process to see us have the opportunity to recapitalise it. And then, of course, we will have existing shareholders hopefully taking up their rights and then participating in the order of around, I think it is around 7.5 to 8 billion shares of the 11.5 billion on issue.
Grant, there's a question from Lindsay and also a question from John, which is relating to the board and what sort of changes have been either to the board or management since the EMC liquidation and over the last 12 months.
Yeah, well, that's a good question. Obviously, we have had major changes in the management team. Jonathan stepped up to being CEO in October or late September 2018, and the management team that was in place for the better part of the preceding 5 to 10 years left and moved on. A large amount of the board has moved on. And that's a result, largely as a result of the reduction in the operations and the European side of the business. Also, that we have now divested or liquidated the EMC business, and as a consequence of that, there's been attrition in the board, and we're now down to a core board of 3 directors plus a new proposed director being Anthony Shields, and a chief executive being Jonathan.
Grant, we might take some technical questions on the entitlement issue. So a couple together. Is there a cap on the shortfall? And one shareholder has said they have an entitlement to 700,000 shares. And if they take up their full entitlement, does that add to their existing number of shares?
Yeah, so if they take up their full entitlement, it adds to their existing shares. So, for example, a shareholder that's holding 100,000 shares has the opportunity to take up another 400,000, which will take their shareholding up to 500,000. If they wish to apply for more shares than their entitlement, they are welcome to do so under the shortfall offer, and the application form provides for additional shares to be applied for.
Grant, another technical question on the raising. If shareholders do not take up the offer, what happens? And I think there's probably a 2-part question there. What happens to the individual shareholder if they don't follow their rights, but the overall capital raising is successful? The second part of the question is, what if the capital raising is not successful?
Yeah, so if they choose not to take up their rights and the share and the capital raising is successful, they simply suffer dilution. If they choose to not take up their rights and the minimum subscription is not raised, then the relisting and the continuance of Carnegie as we know it will not continue, and most likely the company will proceed into liquidation.
Is it worth pointing out a third scenario there where if shareholders were to take up their rights and perhaps a shortfall as well, if the company wasn't successful in raising the minimum, all those funds would be returned to them?
Yeah, that's right. So it's important, that's a good point you raised, Jonathan, is that shareholders that put in their money under this rights issue can be assured that if the minimum isn't received, they do get their money back. It will be returned to them. So it's not a situation where their funds are at risk if we don't achieve the minimum subscription.
Thanks for that. So we might just sort of go through some of the other questions. Will you be focusing on wave energy or desalination as well?
Okay, so the desalination part was particularly interesting when we had a hydraulic energy returning to shore, which is the CETO 5 and CETO 3 architectures. It's still interesting, but the difference is that now with electrical generation offshore, the desalination opportunity is really to co-locate a classical desalination plant, produce water, fresh water, when we have excess wave energy, more energy than the consumption demands. And so in a way, it's like a battery. I mean, you can store that valuable resource in the water quite cheaply in terms of a tank. And then, of course, you can, when it comes to the day, you can distribute that water and use the electricity then from CETO to power whatever demand is there. So I guess the important thing with desalination going forward is it provides a very nice complement to wave energy generation because, of course, we're located at the ocean, so that's where desal plants will be. And also it effectively creates a form of storage for us at much lower cost than batteries.
So I'll go back to a question from Tani. Is there a big international market or interest in wave energy? And I've actually moved us back to a slide there where it shows some of the wave energy around.
Yeah, so in the top right, you can see there's major wave markets that are located where you have particularly high wave energy. So the red there and orange is where the largest amount of energy is hitting the shore. So in terms of the international interest, well, I think Enel Green Power's investment in Carnegie is a key endorsement of that interest. Also, historically, EDF's endorsement through the rights to Northern Hemisphere development they have. We've also been approached by a number of internationals, and we're also seeing in Europe, the European Commission really planning out how wave energy is going to be part of the future mix going forward, because they can see this challenge with, as renewables, particularly wind and solar, which are intermittent, become more and more part of the grid, then it's really important to have some kind of firming supply, and wave energy can be that consistent supply that's required.
So I've got a question on the machine learning model. Has it been tested in storm conditions or other more chaotic conditions? And the model that's presented seems quite effective.
Yeah, so the conditions we've tried to, I should say, we are at the start end of this process, but the waves we've generated so far are what we'd call short-crested, which are the chaotic waves where you've got multiple wave directions and frequencies all superimposing on each other and creating that kind of turbulent environment. That's done with synthetic data. What we're looking to do is also use the wave tank data that we've got and wave tank data that others have to prove it in a more real world environment. And ultimately, we'll also work towards getting some data from actual wave sites, and we're working with our academic partners there in doing so. And that will then, I guess, demonstrate more clearly and more fully the capability of the neural network to understand the complexities and the non-linearities in waves and how they interact with the seabed and islands and other land peninsulas and so forth.
I'm just going to jump ahead now to a follow-up question, and Grant, this might be for you. Cap on shortfall. Can we just get a really short answer on, is there a cap on shortfall?
Well, no, there's not a cap on shortfall, but there is a maximum that we can raise under the offer. Given that it's a 4-for-1, if all of the shareholders took up all their rights, we would raise $11.5 million. So practically that is the maximum that can be raised under the offer. We would only offer a total of $11.5 million worth of securities at 0.1% under the offer. So if we reach the minimum, which is $5.5 million, we'll not only be pleased, but if there is an application for shortfall in addition to that, then the board would consider how much of that it would take, albeit to keep under the $11.5 million. I hope that answers it.
Very good. Now, just another question, and Jonathan, you might not know this because you might not be aware of Bombora, but are you able to talk at all about CETO technology comparing to Bombora technology?
Okay, so yeah, I know a little bit about Bombora. They're a fellow West Australian born technology. I can't really talk about their, I guess, their technical performance, but the characteristics are clear and are publicised. So Bombora's technology is effectively an underwater pillow of air that's held down by a concrete shroud, let's say, and as the wave passes over, it pressurizes that pillow and pushes air through a circuit which turns a turbine, generates electricity. Interestingly, the physics of this technology were the same really as the physics that were being employed to drive CETO 1, which was the original or the first design that the CETO inventor came up with, which was sort of a diaphragm in a box under the water. So Bombora at the moment are in Wales. They moved there to find additional funding to be able to deploy their device. So they intend on deploying their device, I think probably next year now, but I'm not entirely sure, somewhere in Wales, I think Pembroke Dock. And yeah, they're moving forward, and I wish them well.
Now this question might be relatively forward-looking. As the wave prediction part of the technology matures, will that be capable of being packaged and licensed for use for others?
Yeah, so yeah, that was one of the points I mentioned in the presentation, was that there are lots of industries. You can imagine shipping, aquaculture, offshore wind, these kind of marine-based industries all are interested in what the waves are doing in the near future for all sorts of operational reasons. And by being able to accurately predict what's going to happen, they can make better decisions and do things at a much lower cost and perhaps more safely. A good example is when you're transferring people from a ship to a wind turbine tower. They're sometimes done in rough seas, and that's something where if you knew something about the waves that are coming in the next 30 seconds to a minute, you could make decisions about when to transfer people and to make that operation more safe. So yeah, it's not going to be our focus, but we're certainly excited about the potential for some of these technologies to be transferable to other industries.
There's a question there that's come up through promoting the company going forward through social media and how we're going to promote the reboot of the company. Probably easiest to just go to page 21 of the prospectus, where we set out what we believe are the key targeted milestones over the course of the next 12 to 24 months, and what we intend to do on delivering those milestones. What we have set out here are clear objectives and targeted timeframe milestones over the course of that timeframe to get to the point where we can identify utility partners at the end of that process to take on our technology. So what you'll be seeing with Carnegie is clear announcements against that milestone timeline, and very, very frank assessments of where we are in that timeline and delivering on those milestones. As Jonathan said, this is not going to be a situation where we are going to be making any statements outside of what we are actually achieving. It's going to be a factual account of exactly where we are at any point in this timeline. So shareholders coming in will know exactly where we are on delivering towards that ultimate target in 2021. We'll obviously use whatever means we can that are available to us through the regulations on the ASX and through social media, assuming that it has been announced. And given our breadth of our shareholder base, we will look towards doing regular updates from time to time on the eastern states, in the eastern seaboard and in the west, if we are over there for whatever reason.
There's probably two questions that are very similar here. How do you present relative to other companies' undertakings of wave energy research, and what makes your technology a leader in the wave energy market? So probably just a discussion about where Carnegie Energy sort of sits vis-a-vis the global wave energy market.
Mm-hmm. Yeah, so as I mentioned before, I think a key feature of the technology is the fact that it's submerged, and that gives it a much easier route to planning approval. I think I'm obviously a little bit biased about the technology that we've all worked so hard to develop. But yeah, look, to me, looking around at the other technologies, I think CETO has a very powerful offering in the sense of its power to weight ratio seems to be above anything I've seen, and its flexibility as well. There's a lot of technologies that are really sort of forced by the very nature of the technology into one particular water depth or one particular seabed configuration. But with our mooring system, the way it's oriented and constructed, it can go into deeper water, into shallow water. We can scale the device quite readily. So I think those are the points that I see giving it a leading edge.
There's probably one question we should answer, which is on regaining the trust of shareholders. The question's quite pointed on the failures of EMC and how the board and the company moving forward intends to reassure shareholders that they can be trusted.
Yeah, and it's a good question. It's something that it gets raised particularly over here in the West with shareholders. And there's a lot of angry shareholders out there. We understand that they've lost a lot of value, and the EMC business was a failure, and I think we all recognised that, and the board as a whole has recognised that it was a bad decision, and we moved as quickly as we could to try and sell the business when it was losing money, but in the end we could not sell it, and as a result of that we proceeded into administration to liquidate it. We still see the CETO technology as a leading technology that we need to push on with to complete this process and push it towards commercialisation. I, as a shareholder and as a director, am passionate about proceeding to that end point, and it's a reason why I put my money up to make sure that we were giving shareholders the opportunity to achieve that outcome. So all I can say is that, yeah, the board will be judged and management on how we go about this next phase, and we're happy to stand accountable to that. But I'm confident that we will be able to, given the $5 million is reached, deliver those target milestones over that time period.
Thanks, Grant. I have a short message from Tony who says, thank you for your time. This has been great. Looking forward to the future for Carnegie. We have another message regarding the Albany Wave Energy project. I think maybe it's just worth quickly addressing the status of the Albany Wave Energy project.
Sure. Yeah, so the government withdrew their funding, the state government, sorry, withdrew their funding earlier in the year from that project, and you know, that was a large chunk of funding, and it really makes that project, which was north of sort of $50 million, very difficult to fund. And you know, I think the approach that we've got now, this digital development pathway, is going to yield as much, if not more, value at a much lower cost and risk. So, look, Albany remains a very, very energetic site and a great place for wave energy. We heard during the week the Albany Inquirer, I think it is, or maybe no, ABC Great Southern, in fact, report that Albany Wave was just a case of when, not if. So, you know, I think I agree with that. It's a great site, and you know, we retain our license there, which is a license to conduct measurements and other things there to the exclusion of others. So, yeah, you know, it's certainly an opportunity for us in the future to consider, but the Albany project, as it was, is not something we're pursuing.
So I'll take another question here from Graham. Will the modelling accommodate freak events such as tsunamis?
So the model will accommodate anything we train it to accommodate, and in places where those kind of events are relevant, we'll certainly train it for those things. Usually, the way the engineering works is you for each site you need to determine, according to the standards, what they call return period is required. So that means how often, you know, in how many years does something like a tsunami happen? Does it happen every 50 years or every 100 years? So if our design requires a 100-year return period consideration and tsunamis are likely to occur in that period, then yes, we'll be designing it to accommodate for that and any other events that are likely to occur.
There's two similar questions, and they're relatively forward-looking, so I think there's limits on what we can say here, which is regarding Enel, is it likely they'll complete a grant, and is there continued interest from the federal government through grants?
Okay, so I can talk to Enel. We're in discussions with Enel about their agreement. Obviously,
what we were planning to do down at Albany did feature in that agreement. So we'll be working with them to determine what the path forward is there. We haven't relied on any of the NL money in terms of the cash flow we've developed for the next 2 years. So that's not going to cause us to come unstuck during the next few years. In relation to the federal government, so ARENA has been the agency which has been supporting us the most. And again, we recognise that the agreements we've had in place have been related to a project, and in this case Albany, and of course that project has changed. So again, we're in discussions with them. But ARENA's been very supportive in the past, and we don't have any reason to think they won't be supportive in the future. Again, we haven't relied on any ARENA funding to come in to support our cash flows.
So that probably links well to a question from Santo, which is on funding and how long the prospectus funding period is. So I think you just confirmed you're looking at a 2-year cash flow, right?
So in the prospectus and the way the use of funds is described, we can't, we're not able to talk about revenues in there, but and so therefore the use of funds from the raising, the minimum raising of 5.5 million, that will be used according to that table. And sees us through across at least 12 months of activity. So when you layer on top of that revenue and other opportunities, we're hoping to see somewhere in the order of 18 months to 2 years. But that's...
Yeah, and then the prospectus is very clear on use of funds and their opportunities. They're not included in the prospectus and shouldn't be considered.
That's right.
Might come up, yeah.
Yeah.
A question from Gail. Have you taken into account rising plastic matter in the ocean? Will this affect the pods?
The short answer to that is no. We haven't taken it into account. And I guess, no, we don't think it will have any impact on the operation of CETO. Although it's very sad, it won't have any effect on us.
Look, there's a couple of questions about other things that are happening in the market. One from Roland. Islands are currently investigating wave energy. Similar one from Roland on 2 wave energy developers, Sea-based AB and Sin Power. Another question from Eero about, that's a different question. So, look, I guess the general sort of sense is there that, get on with it. Do you want to make a comment sort of there on, the company's priorities for trying to develop the technology?
Well, more than ever in our history, we are focused completely on developing the technology. We've got a core bunch of people that we're looking to augment with some new hires going forward. If we talk about the opportunity in the islands, which I think was mentioned as well, islands have a unique challenge in that they're very isolated. They're often limited by the land available for other renewable energy technologies, and so waves present a great opportunity there. And each island's quite specific, though, in terms of the infrastructure available and so forth. So we're confident that CETO is, given its adaptability that I talked about earlier, we're confident that it is a solution for those places, and we'll be looking forward to discussing with proponents of projects there.
This might be the last or second last question, Jonathan, given that we're over the time now. Do you want to talk a little bit about the status of the Garden Island microgrid at the moment?
Yeah, good question. So we received Western Power approval a few months ago, and more recently received defence approval.
So Garden Island is now operational from a solar. We're talking here about the solar and battery system there. So just to recap, that is a 2 megawatt solar system with a 2 megawatt, half megawatt hour battery. And we've got a electric supply agreement with the Department of Defence, who have the base on the island, and we're selling the power to them.
Okay. Grant, a quick question on the ratio of domestic to international shareholders.
Yeah, our shareholder base is 95% Australian. So there is only a very small parcel of shares held overseas. And that's pretty much always been the case. We are spread across Australia and obviously based in Perth or in Fremantle. So it is from my point of view, I'm very passionate about Australian technologies, very passionate about seeing this Australian technology continue and ultimately be the world leading wave energy technology once we've taken it through to commercialisation. So that's the target that we have, and I hope that shareholders see that and believe in what the board's putting forward under the prospectus and in our objectives over the coming 12 to 24 months. We look forward to continuing to report to shareholders should we be successful in completing this fundraising.
I think that's a pretty good wrap-up question there from Grant. Jonathan, did you want to say any final words at all?
No, just as I said in my presentation, we've got a really passionate team of people at Fremantle that are, they're very capable and they form a great core. I think we worked out the average tenure of those staff is something like 7 years. So, these are people that really understand the technology and have stood by through fairly tumultuous times and really looking forward to getting stuck into it and taking the technology to where it should go.
All right, I think that we're past 5 minutes past the ending time now. So thanks everybody for attending, and we'll wrap up the webinar there. Any other questions, of course, you can feel free to send through to the company.
Thanks everybody.
Thank you.